Stimulus is the status quo. That's why you like Bitcoin, because you can sense, is the central bank raising interest rates? That stimulus is the status quo, the debasement of currency. It's the only way. And what, the Fed going to go to what, 10%? What's left? Rubble. Asset prices going up. End of game.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. In this video, Raoul will share his views on the economic system, the stimulus, the debt, the inflation, and the crypto market. He will address some of the key issues that many people are concerned about, such as how does the crypto market mirror the economy, and what lessons from recent collateral token deleveraging? How does stimulus prevent economic collapse, and why is debt growth crucial? How will the central bank respond to changing inflation dynamics and reverse tightening policy? How does borrowing against collateral create risks, including a price shock triggering a credit crunch and recession? Let's join Raoul Pal in a conversation about these topics and more.
If you borrow money to buy a house and the value of your house goes down 50%, you're insolvent.
Only if I want to sell, though. If I don't need to sell, I'm fine.
Yes. That negative equity means that the banks then become massively proactive in not doing any more lending. That was 2008. The collateral went down. So what else do we borrow against? We borrow against our jobs. I.e., you go to the bank or you use a credit card, it's because you've got income, right? You lose that. That's your asset, your income that you generate, right? You can't borrow money. The whole system blows up. You can't pay any of your other debts. In the stock market, in the financial markets, people borrow against bonds and they borrow against stocks and they borrow against all sorts of other elements of wealth. If those things go down too much, then people stop asking for their money back because the collateral doesn't cover the loan. And that's the issue that the society faces. So it's at every level here. It can't happen. So if your share price goes down too much, you probably can't borrow money if you're a public company because people then worry, can you pay them back? If your income goes down, all of this stuff. So therefore, I think that, as I said, this is how the world works, is stimulus now in this particular phase of the world. And therefore, looking out 9 months, the probability is, knowing what we know about debt and demographics, that the central bank has not only stopped raising rates, but is probably easing rates to try and balance out. As you talked about, this is what you want them to do, right? You want them to try and just stop the worst part of the collapse and the worst part of the boom. So they'll be doing that. The probability is that they will also be trying to inject money into the economy because there's no velocity of money because these old people. So that's quantitative easing. What does that do? Asset prices go up again. So all roads lead to asset prices going up over time. It's a trick because they're devaluing the value of the currency. It's a trick. But then you've taken the bet and I've taken the bet, which is like, we like crypto because we think it not only offsets this whole mechanism because it's a fixed asset, but it also is a technology that we think unlocks a whole bunch of other opportunities, and therefore it's valuable. So that becomes a superior bet, and I can't get to a more superior bet, and I've tried, and I've gone through everything. I just wrote a huge, long 160-page article about all of this in Global Macro Investor, and I still can't get to a position where, in this construct of the world, that Bitcoin, Ethereum just don't become even more and more dominant and valuable.
The U.S. housing market has been experiencing a boom, driven by low interest rates, limited supply, and high demand. The median home price rose 19.1% year-over-year in September 2022, reaching a record high of $380,000. However, some analysts warn that the housing market could face a correction as affordability becomes an issue and mortgage rates start to rise. Jobs report revealed on February 5, 2024 that the U.S. labor market continued to be resilient, with a remarkable addition of 353,000 jobs in January, following an upwardly revised 333,000 jobs added in December 2023. Wage growth remained robust as well, with average hourly wages increasing by 4.5% over the past year. Although this marks a decrease from the peak in early 2022, wages are still growing significantly faster than pre-pandemic rates.
Stimulus is the status quo. That's why you like Bitcoin, because you can sense that stimulus is the status quo, the debasement of currency. It's the only way. Because if GDP growth doesn't grow as fast as debt growth, your income is not covering your payments, right? It's as simple as that. And the only way of reducing GDP growth in that formula is debt. So debt needs to grow. The economy needs to grow fast enough that it pays it off. But now each unit of debt lowers each unit of debt gives you less GDP than it did. So it's now $3 of debt gives you $1 of GDP growth. And it's been going like this. Okay, so if that is the construct within which we live, the truth, then at some point, if I look at the future and say, I'm going to live in 9 months in the future, is the central bank raising interest rates? There's almost a zero chance.
Really?
Well, because we've already got to the tipping point where inflation is starting to fall. Just the extrapolation of interest rates mean that they will be below the Fed funds rate by about March or April next year. So therefore, and what, the Fed going to go to what, 10%? What's left? Rubble. People rioting in the streets, right? You can't do it. So you've got to the point, you're getting close to the point where the rate of change changes. And in 6 to 9 months' time, the Fed are likely to have stopped and probably cut. Because stimulus is the only way the world works.
So they raise rates just to lower them again.
Correct. So they lower the rate of inflation, but then it's like, oh shit, we need to bring up GDP growth, because if not, we all go bust. Right? We need asset prices to rise because you can't let the collateral go bust. That's what's just happened in crypto. The collateral, the FTT token, the Luna token, all this stuff went bust. End of game. All the leverage gets blown up. So they can't allow that.
The Fed announced in January 27, 2022, that it would start tapering its monthly bond purchases by $15 billion, from $120 billion to $105 billion, as a first step to reduce its stimulus. The Fed also signaled that it could raise interest rates as soon as next year if inflation remains elevated and the labor market improves. Cryptocurrency exchange Coinbase says many technical factors pressuring Bitcoin, and crypto more broadly, are starting to be exhausted. We expect macro factors to become more relevant for the digital asset class in the weeks ahead, which could be supportive for performance, Coinbase's analysts detailed. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.